All right, ladies and gentlemen, I hope you're having a wonderful evening. It was a wild day in the market because even though it looks like we did nothing, there was actually a ton of developments that we're going to go over. And then after hours, you moved 5 times as big. Because you only moved a quarter of a point today. After hours, a couple of announcements relating to chips and minerals. It caused you to go down 1% right now on the future. So that leads into tomorrow, and tomorrow is literally the big day with all of the events. So it's going to be an interesting one because it is playing into this week being the week after post-history. Is this the relief or not? The VIX has cut in half after going up a wicked amount, and it's been generally calm. You have walked back from the edge, but the famous phrase this year, or at least for the month, I started saying it, and I've heard this a lot lately, but you are not out of the woods. So we have a lot to talk about. It is going to be an interesting one tomorrow. I think the last couple of days have been calm, and tomorrow, if we don't get much action, that could be both good and bad, and then all of the attention will be towards earnings, and we have to talk about earnings. I got something big for you, baby. But Chatadonia! How we living, baby? What's going on? Good evening. Yes, we are live. Nice to meet you. Nice to see you. Enrico, Alyssa, Joey, Johnny, Stallings, Brenda, Tyree, Brian, Piero, Samir, Haley, and Zach, Braden, baby. What's going on? How you doing, Thebe? How you doing, Jacobin? What up, Marcus? What up, Sergio, Andre, Mar, Amir, Jordan? Oh, what up, baby? Let's go. Vacation. Ice cold mocha. Haas, Dago, Donnie, Kenta, Allergy. What's going on, man? How you live? What up, LSU? What up, Z? What up, baby? Are you ready? So, Chad, we'll be able to talk a little bit after. We'll go over all of it for the people who like a quick watch list, but I think it's pretty straightforward. There's a couple of things we have to talk about, both broad and not broad, but let's talk a little bit about what happened because I think this is very important, and what I'm talking about is all of the little developments. You actually got a ton of different hints. So it was slow in terms of price action and the market moving, but you had a statement. Actually, I got to use two OBSs, but pretty much a couple of different moves. You could see two of them here. So this first drop in the morning, we actually made a flip on it. It was news that came out, and they were saying that the EU talks were not going as well, were not going as good. And then you were reacting, or Trump reacted to Boeing, and then that was the other one in the morning. Guess what happened? You may have heard it, but Boeing got attacked by China, not like in like a war way. That sounds actually really aggressive, but like we talked about, they were going to be a target of the trade war, and today China announced that they were restricting purchases from a couple of airlines on Boeing, so that wasn't good, and then we had a couple of these back and forths today in terms of the headlines, and then you even heard China talk about agriculture both throughout the day. Trump hinted at it. After hours, we heard about it. China was talking with Brazil. And then after the bell, it wasn't really Trump. I think this is actually the interesting part because NVIDIA filed a 8K, and they pretty much said on April 9th they had to file like a license for a chip export, and long story short, there was a ban on the NVIDIA chips. It's going to cost, or they're expecting, a $5 billion charge. That's why NVIDIA sold off after the bell. That's partly why we sold off here, and it's interesting, and let me ask you this, pop quiz, why is the NVIDIA news interesting? Because they're saying on April 9th or April 11th that they had to deal with this whole licensing thing. Why is that very interesting, or what makes that ironic? Something about that is very ironic. So the news came out after the bell. It was earlier, but there's something about it that's just very ironic. It's very ironic. Yeah, there you go. You're close. What did we start off the weekend with? The whole weekend, the rumor was that, oh, yeah, there's going to be chip exemptions. So actually, literally during that time, they were actually getting hit. Literally, NVIDIA was. And that's what came out pretty much after the bell. So that's what we got. We're going to hear more about it. And then there was a probe into critical minerals. I think this has to do with that ocean stuff we were talking about the last couple of days. And then people anticipating and getting ready for Japan and whatever comes out of that tomorrow. So we'll talk about that a little bit. But now, leading into tomorrow, this is literally the big day. Why? You actually get China data tonight leading into the morning. So even waking up, you're going to hear a little bit about whether or not China's economy is doing good, tie that into the trade war, leverage, all that good stuff. And then Jerome Powell, he's going to be there in the morning. It's at the Economic Club of Chicago. So he will probably be talking about the economy. He's going to, that's the beauty about this. We are probably going to get this statement before he comes on. So that means if you really want to trade Powell, assuming he's actually going to say something, you might want to be there on stream or pay attention on the Fed website because they might release this statement before he talks, and then there's going to be a Q&A where he could reveal whatever. But I don't know what I would be expecting tomorrow out of Powell. Again, he's had an opportunity to talk. I was telling you guys yesterday, make no mistake, Powell could make himself important at any moment. I don't know if he's in the position to do that. And actually, again, listen to Besson. And if you heard from Waller, and like Besson said, Waller and what's her name? Boston. Was it George? I think. But I just showed you that clip last night on the watch list. But long story short, things have been kind of chill and the data has been good. So, if anything, I don't think Powell is going to be in the position to upset anything, but he's definitely going to have all eyes on him tomorrow. So, you never know. But other than that, you're also going to get the retail sales in the morning, and then you're going to hear whatever comes out of Japan. And we'll talk about that a little bit on the plays, but it doesn't necessarily guarantee a good outcome out of Japan tomorrow, but pretty much all of the important events are tomorrow. So if you even look at the VIX, the curve, even leading into earnings, you have more volatility priced into tomorrow than any other day. And then don't forget, Friday is closed. Good Friday. So yeah, other than that, market is still pretty slow. So if that's where, even though it sounds really exciting, just remember, if the market isn't you just went through history and the VIX is reacting megally in both, I don't know, is megally a word? In both directions, you have moved very, very major, and it's actually been insane. So with all of these events, you may not necessarily get a wild reaction. However, these are going to be important. We'll see where it takes us. Head on a swivel and just be ready. So we'll find out where that leads us. But that is key number 2. And now finally, my friends, key number 3. Are you ready? We got to talk a little broad here, man. I'm waiting. I'm like, oh. Because remember, the last couple days, even today, just imagine, you barely moved today. You did move after the bell, way bigger than how you moved all day today, but that's because it directly impacted NVIDIA. That makes up a big portion of the index, but think about it. You are absorbing a lot of information. I hope you guys understand. I think you understand it. Literally, man, even today, I'm seeing the futures, and then people tagging me. They're like, what's going on? What's going on? I'm like, I just got back from the gym. I was talking about potatoes. I'm just trying to shower. I'm like, oh my God, another headline. Right when you think it's chill. Oh, another one. History, 10%. Sell your 401k. Unexpected. It's just, there's been a lot, man. You've gone through a lot. So that's both good and bad, right? But think about how much you are actually absorbing. The market is taking in a lot of info recently, and now that kind of leads into this. The longer you go without a really bad catalyst, the more likely people are going to believe this "he is risen" rally. And what I'm talking about is Easter, after the break, the buybacks, after the first couple sets of earnings, you've just hit a huge level on the VIX. If things cool down for a little bit, hear me out. I think it's bad to call it "he is risen" because the whole story of the Bible represents eternity. But if there is any sort of short-term rally, it's going to be just that. It's going to be short-term. But generally, you're absorbing a lot. As long as things don't get bad here, this is kind of feeding into this idea that we cool down a little bit and we walk back. But you still need a lot of things play along. Again, everything from the dollar all the way down, especially down to the bond market. So we'll see what happens, but keep that in mind. If you start taking a lot of bullets and the market is now kind of not going lower, the panic is not getting worse, this is all going to kind of lead into a short-term window of things kind of easing up until we see what happens with negotiations or what happens after 90 days, or is there something good, or do the bonds relax, or do they get worse, or do we have to deal with a whole new set of unexpected things, and then do the tariffs, and does he announce something and then walk back something, and then what happens? I don't know. Are you sleeping? Are you awake? What if it happens when you're sleeping? What if it's after the bell? What if he's winning? Are you tired of winning? I don't know. Are you tired? Wake up. Good morning. But that being said, earnings is really weird. And I think earnings is about to be kind of important because, again, people are looking for this short-term relief rally. Things are kind of lining up. Again, things haven't gotten worse. You're dealing with a lot of stuff. Let's get over this tomorrow. That's going to have a ton of events. See where that leads us, whether or not you hold up. But then it's really going to be about earnings. But, oh, dude, earnings are wicked right now. You guys know I love earnings, right? So this is going to be a really weird earnings season. Because if you guys remember the last earnings, guess what? The market just started going crazy. You didn't care about earnings. Everything started moving left and right and policy. Everybody was kind of caught up with the broader changes to really focus on earnings. And now this time around, you still have uncertainty. The market got worse. And then, dude, a lot of things have changed. But there's two really major weird things. So we'll start with the one that you've seen before. Why? Because you're familiar. So if this was Paul writing a letter to the churches, he would start with the good news. But so the good news, you've seen this before. And long story short, the market is sold off massively leading into this earnings season. And people have gotten very worried. I'm sure I don't know, have you seen anybody worried recently? I don't know if you've seen that lately. But long story short, if you looked at or if you surveyed fund managers and analysts, right now they have a very dire outlook. I actually believe their profit outlook, it's the worst since 2007. So analysts have already guided down. People are already expecting bad things. So the bar is kind of low coming into this earnings season. That way, if you miss, it's going to get even worse. And then at the end of the day, there might be an opportunity where a lot of companies, they come in line a little better. They've already moved 15, 20% in the last month. So, yeah, I don't know. Or we've kind of already seen it. Several companies haven't changed their guidance, and they actually haven't been that bad. So think about that. But that's the first part. And you've seen this, again, during other moments, even during 2022, when there was a big pullback in a temporary rally, literally this happened. Same exact thing. It was around earnings. The analyst got really bearish. Earnings came in, mixed it in with a couple other things. There was a bounce, and then a couple months later, rates and Powell, you went right back down. So I could see that happening more likely than anything, but just a different set of circumstances this time around. But keep that in mind. And this is why, again, after tomorrow, just so once you know, again, depending on whether or not we actually get reaction from whatever happens tomorrow, we start moving on and looking ahead. Earnings is going to be really the next catalyst and main thing to be looking at. So this you have seen. Now, the second thing, I don't even think I have a chart to show you, actually. Believe it or not, this one's wild. Are you ready? I think this one's fascinating. United Airlines today. Their earnings after the bell. I mean, I don't really care how they did, to be honest. They're up 8%. Oh, dude, but they did something very weird. Are you ready? They gave dual guidance. Yeah, bro, it's the craziest thing I've ever seen. So they're like, yo, hear me out. So, like, if I wasn't a liberal, this is how we would do. But if I was a liberal, this is what they like. All right, so hear me out. So if I did pay all my bills in time, if I don't pay my bills in time, bro, it's the wildest thing I've ever seen. They literally came out with a dual guidance. So they said if the tariffs are in this case, this is how we'll do. And then if the economy goes this way, this is how we're going to do. Oh, yeah, game changer. Because, one, I've never seen this. Two, people are already kind of like, yeah, that's smart. I fucking love Wall Street, bro. That's it. We do fucking. They're like, yeah, that's actually pretty smart. Now that we think about it, wow. Okay, that kind of makes sense. Yeah, so they might have just set a trend, and I would watch out for this. I think this is actually very critical. And this is what I'm saying. Earnings season might get weird because is this going to dampen the effect? Are more companies going to do this? I mean, literally yesterday, we were just talking about companies pulling guidance, and now you got companies giving 2 sets of guidance. So that's pretty cool and wild and unique. And now we will see where that leads us into this very weird time with earnings. So let's get all of our events tomorrow. Let's get our earnings, and then let's see where it takes us. But now, let us get into the plays. So, right off the bat, speaking of earnings, you got one this week, Tesla. And I like this one. I made a play on it. I'm both ways on it. I made a flip. I got a free play on like 20%, 30% today. Took that, and then I double dipped, and then it went up, and then I didn't take the profit, and then it came down, but then I got a put, and then the put went up, but then the put didn't go as much as the call because the option chain is scammy, but then again, the market is moving extremely slow after moving extremely fast. So that's the play that I'm in. But Tesla has been very quiet with all of this tariff news, whether it's been exemption or this or that. So I thought it was a good time. The plays, the premiums were decent, but again, it has been a lot of stop and go, but they're not pricing in a lot. They don't really move a lot on earnings, but Netflix was only pricing in 5%, and then they moved 5% today. So there's a similar move if people feel good about this whole dual guidance thing. Again, if the events and PAL and everything isn't bad tomorrow, maybe we see people get excited for earnings, but I'm both ways. I don't know if I'm going to hold for earnings. I do think the premiums are going to err towards the side of scammy, but then again, a lot of names have moved 20%, so we'll see. I'm going to lean towards sell before earnings, but keep your eye out for this one. I think it's going to be very interesting, especially, again, considering it hasn't really moved with all of the tariff news, so watch out for that. That is play number 1. And then play number 2, Japan. So this one, EWJ, a lot of people were asking today, they're like, how do you play Japan? I mean, you could go for Japanese banks and other Japanese companies. I mean, literally, sadly, I think let me show you this. So I put EWJ on here, but I mean, the sad reality is that if you look at the options on EWJ, there's literally like no bid. They're very illiquid. It moves very, very weird. And quite frankly, you're like better off trading Toyota. I know it kind of sounds wild, but the chart borderline moves exactly the same, and you'll at least get a better play. But it tracks Japan. I know, it's fucking ridiculous, but I'm telling you, the whole Japan, I kept looking at it all day today, and I really think all of the options on there, even the equities, I mean, you're only talking about a couple dollars. At least Toyota moves a lot. So keep your eyes out for it, but point is, you have this Japanese stuff tomorrow, and now here's the kicker. Everybody is expecting to hear from Japan tomorrow. We may get a trade deal, but everyone thinks it's guaranteed to be good. But hear me out. If you hear about, oh yeah, Japan came and we're working on a deal, right? But then Japan doesn't walk away with the deal, I feel like that could be negative. So it doesn't guarantee that this goes up. I'd watch EWJ. Keep an eye on Toyota as well. I'll throw that in there for you. But I think that's a very important one to watch out for. But that is play number 2, very relevant for tomorrow. And then finally, play number 3. I like this one. I like this player. You ready? I'll just give it to you. Airbnb. But I'm going to throw in its arch nemesis, Marriott. You know the battle between hotels and Airbnbs? I love it. One of them spying on you, the other one's charging you $90 for a bottle of water. You're going to be dehydrated? Spend the money. Spend the money. You want Wi-Fi? $35. We didn't clean the sheets for a month. What? The battle of Airbnb and hotels. They're all terrible. That's why do you think I don't travel like that? I like traveling. It's been cute and all. But why do you think this whole time? That's why I always tell you I like my fucking crib. You know that? I like my clean-ass sheets that I clean myself. Oh. Ah. So, here's the deal. This relates to the guidance. Airlines are decent. People are giving all sorts of guidance. But I don't know if you guys have looked at travel stocks lately. They've all been wrecked. They all look the same. Airbnb looks like Hilton, Marriott. They all literally look the same. So if these airline earnings keep coming in, if dual guidance works for the travel industry, there's going to be a rebound to be had here. And then again, you're about to get all these earnings. Just keep in mind, if we get through a quarter and all these companies don't have as bad as feared earnings, you guys don't remember that? So that's what's either the earnings are going to be bad, they're either going to be in line, or given the fact you had a wild VIX move and everything, don't forget there was an era in the market where, bro, I'm telling you, it would be the worst possible outcomes, and their stocks would go up 20% on earnings. Why? Because it wasn't as bad as feared. So don't forget, Wall Street hates you, and they will do this. So be on the lookout for the outcomes, but again, depending on what plays out with these, watch out for some of these industries that if collectively, if they've already moved down, if the earnings and early earnings aren't that bad, there could be a rebound. And I think travel, lodging, Airbnb, Marriott, Hilton, these are going to be some of those to look out for in the short term. So we'll see where those take us. But other than that, I made a Tesla plays today. What else? I got scammed on a QGen. I did both ways. I got a SPY call that I held overnight because I think I made a mistake. I anticipated too much. So I held a SPY call today. It's funny because I ended up buying UVXY right before the bell. So that might end up winning because the premiums were low. I'll lose on the call. We'll see what the UVXY does. But if we gap up tomorrow and we don't move, you'll get clapped. But long story short, I held the call. I liked the play. I thought we were going to move up both intraday, but my feeling was Japan. I thought we were going to get a good Japanese trade deal, but I think I made the mistake of just going too early in this market. I think I did get a little certain, but long story short, I think you're better off literally waiting for the very minute the news comes out and then just going from there. You're better off with follow through when the market is this slow. So I think that was a mistake, but then having the calls led me to buy a put because I was like, well, if I'm going to hold it, might as well get some of the cheap VIX now that it's sold off. But point is, I think if we keep moving slow, I think you're way better off just waiting till you actually get the real trade updates rather than kind of front running. I think front running and trying to get ahead, it sounds really appealing, but I think you're going to pay for it. So same might be applicable to earnings, but then again, it paid if you did it with Netflix. But other than that, what other plays did I make? I played a TTD. I think that could be a good cheap Netflix sympathy. And then I think that was it. Yeah, Tesla. I did an HPE. I kept that one really small. I spent only 3 cents on it. I think I spent $30 for 10 of them. But yeah, there was news about them getting a stake by some fund. But yeah, small $3 plays. But other than that, we did good by noticing, again, the in the money versus out the money dynamic played out again today. You've really had small moves. Out the monies didn't really move. Even in the monies, it didn't really go like that. But at the end of the day, I think it was a good choice by avoiding. I did hit a 40%er, so that helped out, but that was it. And then, again, I hit the Tesla, then double dipped, and then holding that now both ways. TTD is related to Netflix because they help service some of the ad-based tier. They help with the ad parts of Netflix. So that's how they're loosely related. Ta-da, you learned something new today. There you go. Any other questions? But that's your watch list. If you have anything else, now is the time. Now is the time to ask. Are you the man, Aztec? Wow, water is good. I think the futures are a good 1%. It seemed more dramatic, but it really wasn't that bad. Yeah, NASDAQ is down 1.3. Not bad. Yeah, SPY down 0.75%. You gap down because of NVIDIA filing their chip licensing, a.k.a. ban or restrictions on chips, and then Trump signed a bill on exploring or critical minerals or probing them. And then I'm telling you, bro, there was a headline at the same time. And I think everybody is fading this. Hear me out. I think everybody is ignoring this, or they're kind of downplaying it. But I'm telling you, I have heard so much today on China agriculture. And at the same moment of all of these headlines, there was a headline on China and Brazil talking about agriculture due to tariffs. And I heard Trump bring it up today. China hit Boeing. And then I heard this after the bell again. I think this is kind of not getting as much attention. And I've always told you, if we are really going to escalate, I do think the moment we really bring the farm stuff and China and agriculture, I think that's when it starts to hit another level. So, but at the end of the day, the going narrative is that it was the chip ban. So we will see. Chip ban in the minerals. Water is good. It is good, bro. I love it. I don't know if we'd sanction China. You know, we like China. We like working together. These trade wars all sound aggressive, but at the end of the day, everybody likes trade. We're just playing this game, and I don't know. It's a very serious game. It's kind of even rude to call it a game, but I mean, welcome to welcome to IPE, International Political Economy. This is like the dynamic of it. It's kind of like, again, the prisoner's dilemma and all that. But when it's all said and done, though, I don't think anybody's looking to go to that point of isolationism of that extent. The video, I don't know, actually. I think if you just Google what he said, it's about the flesh. I think you could find it. My day's been good, bro. How's your day? I had a good workout. My voice a little clap, but a lot of talking and working out today. I'm feeling good. Push-up competition? Oh, I don't know, man. So we are going to have another quiz today, but that's it. What happens to gold? Oh, I don't know, but at this point, I think there's bigger things driving gold. I mean, for now, Wall Street and the banks, we said it last week pretty much. It's long until policy pivot. So until Trump or the whole world backs down from this trade policy or the Fed, I mean, gold is looking like the ultimate winner of everybody going berserk. I mean, long story short, you have a bunch of people with paper guns saying they're going to hurt each other. You guys realize that, right? If you really look at the trade war, like UK, that relates, think about it. It's funny. Look at that. Just by asking me questions, you could pull data out of me. Because I totally wouldn't have told you this. I would have forgot. No, but seriously, because I do realize it's like you're watching people go between US, the rest of the world, again, Europe, and the money, and they're like, oh, no dollar, oh, no confidence, and back and forth, right? You really realize it's like paper guns. Everybody has paper guns. Just everybody with their little paper currencies and the floated values all destabilized after the last couple of years. Like, I'm not going to buy, and we're going to do this. And then the currency move, and then even if we do this, and then they're like, it's pretty funny. So that's why gold is kind of the winner in all this insanity. Because gold is the only one that's not batshit, getting involved in it. What have I always told you guys? The problem with Trump isn't that he is Donald Trump and does crazy shit. You realize that, right? Some people will disagree with me. They're probably going to throw a fit. But that's not the problem. The problem with Donald Trump isn't just that he does crazy shit. The problem is that everybody copies him. Do you get it? No, the problem's not him being random. It's the problem he's random and the motherfuckers copy him. And then they play his game. So he's like, I'm gonna tariff you $1 million. And then they're like, what are you talking about? I will not handle this disrespect. I tariff you $1 million. And then they play the same game. You're right, he'll be like, you're a poopy face. You're a little poopy. You smell like poop. They'll be like, you smell. You are smelly poo-poo. You have more poo-poo. Do you get what I'm saying? Is that they play the game. You call it crazy glazing, but honestly, I just think you probably grew up in a very, very liberalized community and you didn't make enough money to think for yourself. Yes or no? Yeah. Okay? Moving on. Harsh reality in a good, funny way. Ha 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 ha. I know, very clap-a-rooney, but it's okay. The point is, in all of this, gold doesn't play that game. So gold does not go back and forth. Gold does not engage in a trade war. It doesn't do any of this other stuff. It's literally just being gold. That's why it's operating as a safe haven. So until there's a pivot and everybody calming down or a real pivot of policies, gold is the winner. And now, I mean, here's the chart though. Are you ready for this? There's a couple of things. Well, let me show you this one. Here's the first. This is actually the biggest in history ever. The shift in 2 months from overweight equities in the U.S. to underweight. This 2-month change is the biggest decline ever in history. Or this 2-quarter change, pretty much. Biggest in history. Never happened that pretty much managers went, oh yeah, we're all overweight America, all in tandem. And then they're like, oh my gosh, no, we don't even want to touch America now. And you've heard this. Again, you're hearing people talk about it. You've watched other you've watched Europe and other places go up, right? As we've gone down and people have talked about this. I even told you about this well in advance. We talked about, again, exuberance turning into humiliation, exceptionalism turning into humiliation. But are you ready for this? I'm going to blow your mind, though. I'm blowing your mind. Get ready for this. this is going to blow your mind even more. Because although Europe has had one of the best starts, I've showed you that other chart a couple weeks ago. Again, it was like one of the best charts ever for Europe, one of the best starts. Although it feels like very dramatic, this whole like anti-America, you know, where my liberal homie at? He probably agrees hella with me. Like, yeah, oh my God. Right? I feel you, G. It's not your fault. I blame the media. They did this to you. They did it to my sister. Don't worry. Anyways, this chart should blow your mind. Because this is showing you overweight, underweight America versus the rest of the world. So why should this blow your mind? Because this whole go underweight America, this actually started at the end of 2023. Isn't that odd? I did not expect that. So this is where if you're actually looking at it and you're like, yeah, everybody is kind of, there is a lot of, again, you've watched Europe go up, even people talking about deleveraging and going there. But at the end of the day, like, yeah, like this is, I don't know if the wire's in the way. Please hold. Yeah. Like, but this is what just happened. Right here. 2025. This is like recently, and then beginning of the year, even the front run. Like when Donald Trump won and all that. It's not that crazy. But again, this whole Europe, Asia, and money flowing there, that was well in advance. So I thought this was very, very interesting. This is just showing you overweight versus underweight. Pretty much fund managers and assets who, you know, being overweight America, underweight the rest of the world. So U.S. versus MSCI, ACWI, the rest of the world index. Thought that was very interesting. Did I have another chart? Oh, yeah, nobody knows shit, too. I guess I'll show you this chart. Everybody, you know how I told you everybody's just making shit up? And I told you this well in advance. I told you I had a good time. I think people are kind of cooling down, but you know I reminded you the dangers of certainty and how I told you, even myself, I'm not jumping to, you know, be humble, have humility. And even though I've gotten some things right, you know, I'm telling you guys, I don't know what the fuck's going to happen. I'm prepared for disappointment. I have no fucking clue. Dude, nobody does. That's why this is difficult. Again, the uncertainty has made this very, very hard. Are you ready for this one? I think this one's a good one. The gap between the highest and lowest targets of analyst estimates, this is the widest you have been in all of the 2000s. So even on an analyst level, the cluelessness is showing up in the data. So even if you looked at Wall Street, this is data that literally proves people are kind of batshit confused. So if you have almost a 60% gap between the highest and lowest target from like the official big banks and like Wall Street, pretty much the highest and lowest targets. So all this, you know, all the smartest guys in the world, the big money in the world, smart money, they can't even fucking agree. There's almost, again, a 50% gap. Nobody knows what the fuck's happening. That's literally the answer I would get when I asked my dad hard questions that he couldn't understand in this country. 50-50, Habibi. Is the stock market going to go up? It either go 100 or 50. What do you mean? It go to 50 or 100. Maybe 150 or 200. I don't know. One or other, Habibi. Don't worry. 50-50. What the fuck? I'm going to pay you 2 and 20 to... What the fuck? So yeah, nobody knows what's happening. So honestly, like low key, betting on the random guy on YouTube, if there's any time to do it, it might be now. Because this is our best shot. Seriously. Because there's a lack of consensus right now. It's anybody's game. So let's get it. That being said, I'll give you the last chart. You guys remember that little global uncertainty chart I showed you? Yeah, he grew up. This chart is insane. Yeah, I can't. It's not even. It's ridiculous now. It doesn't even Yeah, I can't even. I don't even think it tells you anything. It does. It just show That's why I told you guys it was a bomb. Global uncertainty. That's why this week is so interesting. Because things got really bad, dude. That. What you just went through is wild, and you're not done with it, but it's definitely. I don't know if you could walk back to the edge like you just did. But point is, remember this chart related to the VIX. There was a nice history with that, but this is going to stay up. We'll see if it cools down over the next couple of weeks. So, yeah, no, this is global uncertainty. Kind of wild, man. So, you guys are living through a wild time. Make no mistake. Don't let your guard down and, don't let price kind of be the determinant of you paying attention, because that is kind of what makes this so difficult. But other than that, my friends, that is all that I have. Is there any other questions? But you unlocked all those charts by asking me about gold. So that was a good question. Cheers to that, my friend. So since the dollar is a reserve currency and we import more, we technically export the dollar in treasuries, but it's not factored in the balance of trade. If regime shift and we export, what happens? Well, it is kind of balanced in trade. That's the thing that I think a lot of people aren't really addressing, is that you have the current account and the capital account. So the current account, that's what leads to the other countries getting the surplus of dollars. But now the capital account, that's what they buy with it. That's where you're saying, this demand and all that. They used to buy our treasuries. They still do, but the only way this gets negatively impacted is if everybody really stops buying our financial assets. And nobody is talking about this. I'm watching people make jokes and criticize tariffs and all of that, and people are bringing up, trade, and they're saying, well, the deficit and Trump and this and that. But at the end of the day, it's really the balance of payment adjustment and adjusting the imbalances beyond this. And I'm not saying Trump's tariff plan solves that, but there is another element of capital at play and other countries buying our assets. So we'll have a problem if other countries stop buying our bonds, stop buying our stocks, and guess what? Stop buying our real estate. But I don't know any other way to put this. I kind of hope that they do that. Why? Because if they stop buying it, I'll buy it. Ta-da! But that's how I feel towards it. So it's a risk, but I really think the risk of all of this is if these countries that we engage in a trade war, do they stop taking their surplus, do they stop buying our assets and our debt? That's going to have more of a big effect than I think anything, believe it or not. And I think this is too complex to really be put on CNN or Fox. Great question, great answer. Well, thank you, and thank you. Anybody else? Otherwise, we might have to call it. Stop giving Don Lemon ammo. I mean, I would actually appreciate them if they told this to the public. I mean, again, it would just help people understand it, but then again, it's like you could have the sad reality is that you could have these long, very accurate and convoluted talks about trade. And then if you are a genuine academic who actually cares about the truth, the answer that it always ends in is it depends. Sadly. Do you realize that? I hate to break this to all of you. That is the sad reality. You could take any... That's why economics is kind of bullshit. Because the real answer is always it depends. That is life. I mean, amen. But that is kind of what happens with all of these things. Because you could go and talk about trade this and policy, and we could go through all of the different impacts and what could happen and what can't. And then, again, it all depends on how it's enacted, when it's enacted, who does what happens in the other spaces. And that's why it's like, man, unfortunately, it's very hard to... There's really a very, very slim amount of objectivity in all of this. So that's what is so difficult about it. So, yeah, I hope that gives you what you want, but that's hard for some people to truly comprehend. But that's what I'm saying is, like, you know, people have these conversations, they use it as political ammo, but I would love for people to be educated on it, but you could spend a lot of time for, you know, the answer to really still be, unanswered. Because a lot of it, you know, a lot of the reality, I mean, let me put it this way. The best example of, like, economics that a lot of you have really seen and how wild it is truly is COVID. Dude, you shut down the economy. We were just fucking spitballing, dude. We were just brainstorming, like, shut it down, do this, 6 feet, fuck it. Yeah, try it, and then start here, give them money. Fuck it, lower the rates. Yeah, fuck it, no rent. And then imagine, bro, all these, and you, like, what would have happened? What if you did this? You should have had this happen. If you did this, what if you stopped this? What if China did that? There are so many hypotheticals, and again, even the supply chain emerged out of nowhere, and so many, like, random positive and negative externalities that were created that you would have never been able to forecast. Or, again, just like, reality is truly stranger than fiction sometimes, and that's what you kind of see play out. And that's why it's like, you know, be aware of theory, be aware of how it works, but when it is all said and done, you should have a margin of error on all of your economic theories, because everything always comes down to, like, how the game is played. When it's all said and done, the brush has to be painted in a certain stroke. I don't know. I'm a psycho, but yeah. That being said, I'll leave it there. Chattadonia, I love you all. God bless America. Thank you to the veterans. And please have a good night. Okay? Rest up. Be easy, man. You know that, and be blessed. You know, smile. You have a long, long year ahead of you. A lot will be different. Some for the better, some for the worse. But remember, you're prepared. Be prepared for disappointment. Can I give you a good reminder right now at night? Like, for real. The best way to lose energy, like the best way to get taken out easily, is to think that you're done on a shorter timeline. Let me give you an example. It's like being in the desert. And if you, like, get this weird idea and you're like, oh, it's going to rain tomorrow. And you just, like, give yourself this hope. Hope is good. But if you put it on too short of a timeline and box yourself in, then you're like, oh, tomorrow. But then the rain doesn't come tomorrow. Even if the rain comes in 2 days, you're going to be clapped before then. Do you understand that? That's very prophetic. That's it. So just don't screw yourself over by giving yourself, like, a temporary hope. Don't widen it out. Don't set yourself, oh, well then, yeah, Let me set myself up to get disappointed. Let me set a weird short-term expectation. No, you don't need to. Yeah, be blessed, baby. Be blessed. You have it all. You have it all. Rest. Rest, my friend. Have a wonderful night. Finger to this sky. And hard night.